By far, this is the most profitable Forex strategy in 2021. I actually shared this strategy like 2-3 months ago, and I think it was like 4 months ago, and there's people already making a living out of Forex and quit their jobs just because of this strategy. So in this specific video, I'm going to go ahead and share it with you. Hi everyone, this is Christian here on YouTube, and welcome to a brand new video for the channel. In today's video, we're going to go ahead and have a training in regards to a Forex strategy that I shared based on moving averages that is making a living out of people, and more importantly, they're quitting their jobs because they're making enough profit to make a living out of Forex trading. So if you want to learn the strategy, make sure you stay up until the end of this video. If you're new to my channel and you're into binary options, Forex trading, crypto trading, or any type of making money online, then this channel is for you. Make sure you'll hit that subscribe button below and activate the notifications bell icon so that you get a notification for every new video that I upload. With that being said, let's jump into the video. Hey, before I actually jump into this specific video, I want to give you a warm invitation to a free Forex training that I'm going to have this week. I'm actually having a link in the description of this video where you can register and get the date and time of this new training that I'm having. And more importantly, you're going to learn everything in regards to Forex, in regards to leverage, in regards to lot size, in regards to everything that you need to understand for Forex trading at no cost at all. So if you want to be part of that training, I'm having the link in the description of this video. I'll see you there. All right, everyone. So the first thing that we got to understand is what is this strategy. And this specific strategy is based on a moving average. It's one moving average that we're going to be using. It's going to be the 50 period moving average. And more importantly, this strategy is based on change on trending. It's not based on following the trend, but it's actually based on determining when there's going to be a change on trending and taking advantage of it. So that's what we use with the strategy. Now, for those of you who don't know what a moving average actually is, for those of you who are, not understanding what a moving average is basically a price average based on a different number of candlesticks. So for instance, a 50 moving average is a price, or it's actually giving you the price right here based on the last 50 candlesticks. Depending on the time period that you have, the 50 candlesticks, this is the average price. So basically, when you use a moving average, you are determined based on the period of the moving average, you're determined what's the price of the previous X amount of candles. So if I actually use a 1 moving average, then it's going to be exactly the same price at the closing price of the candlestick. That's actually the moving average. And this specific tutorial, we're going to be using a 50 moving average because this one determines the actual term for the next probably 50 candles. So that's what we actually are looking at. Now, again, as I said, the indicators that I will use, or we will use in this specific strategy, are just a 1 moving average. You need to type in moving average on your indicators and strategies, and the one that says moving average, it says nothing more, that's the one that you need to choose. Now, you need to have TradingView in English. In case you have it in Spanish or another language, you won't be able to find the exact same moving average at the same name. So I recommend you to use it in English. So this is the moving average that we're gonna be using. So it's gonna be marked in here once you actually click on it. And once you click on settings, you need to change it to 50 because it's usually around 9 in moving average. So you need to change it to 50. And then in the style, you can choose whatever style you want. I usually give the number 2 of thickness, and I use the red color because I'm using a white screen right now. So you hit OK, and this is what you are going to be looking at. Now, this is how you are supposed to enter trades, and you need to find three different indicators, or three different parameters, if you want to call it that way. So the first parameter that you have to see is this one, that the moving average, when the moving average is going above and is going below the candlesticks, that's an uptrend. That means that the price is going up. And when you see the opposite, which is when the moving average is actually going down and it's above the candlesticks, then that means it's a downtrend. Okay, so whenever we are looking at the downtrend, what we're looking for is a change on trending. We're looking for when it's going to change and go uptrend, and when it's an uptrend, we're looking forward for a change in trends and it starts going to a downtrend. So the first parameter that we need to look at is one candlestick that closes below the moving average. So this is an uptrend, right? So we're looking forward for a downtrend. So what we look is a candlestick that closes below the 50 moving average, such as this one right here. As you can see, this one closed right here, so it closed below. The second parameter that you need to understand is that that the next candle or a future candle closes without even touching the moving average, which means this one right here. This was the highest of that candle and it didn't touch the moving average. That's the second parameter. And the third parameter is that a candle closes below the lowest of the previous candle. Okay, so as you can see, this was the lowest of the previous candle and the next candle actually closed below that. That's the third parameter. Once we actually identify all of those three parameters, we can enter a position. So as you can see right here, we're going to enter in this position right here. And this is the trade that we have. It is going to be exactly the same with a change on uptrend. And just looking for a good example, let's say this one right here. So as you can see, this was a downtrend. So we see the first candle actually close, not this one. This one actually closed above the moving average. Then this one closed without touching the moving average, the 50 moving average. And then this candle actually closed above the highest of the previous candle. So that basically means that yes, you do have a good entry point right here for a long position. You enter in the next candle and boom, that's pretty much it. Pretty simple, right? Three parameters. Once they meet, you enter a transaction. Now here's the deal, because you probably, you already know how to enter trades and so on, but how do you choose the stop loss and the take profit? And that's super, super important. So in order for you to choose the stop loss and the take profit, I do recommend you to use the indicator called average true range, or ATR. You actually type in average true range, and as you can see, it's right here. You just add it, and by default it should give you this. This is the indicator, right? It should give you that is ATR 14. If it's not, then I recommend you to go to settings and actually put 14. Why? Because it will give you the actual pip size or the pip price for the past 14 candles as an average. So as you can see right here, we see that it's 3 zeros and then 5 7. Now we already know that the last decimal does not count. It's a micro pip. So we take advantage of the last pip, which is number 5. That basically means that our average true range, or the average price, is 5 pips. The last 14 candles have moved an average of 5 pips. So what is it that we do? What we do is that we actually choose an average true range that is at least twice the average true range. So that basically means that if it was 5, then we're gonna choose a 10 as a stop loss, okay? A 10 pips. And as a take profit, I would say go at least 1.5 to 2.5. It could be more once you start using trailing stop, but we can use 2 as a risk reward ratio. I made a lot of videos in regards to risk reward, so I do recommend you to check them out. So so that you fully understand why is this so important, right? So as you can see, this trade was actually win pretty easily. Now we're gonna take a look at the other trade that we entered. And we're gonna choose, again, the average true range is going to be 10 pips. And we're gonna go 2.0 as a risk reward. We're gonna go 1.5. 1.5. There you go. 1.5 as a risk reward. We're gonna see if we can actually win that trade or not. Okay, so we actually hit on play on the replay and it dropped a little bit. It dropped a little more. There you go. Boom. It hit the take profit, right? Easily, it hit the take profit, 1.5 risk reward ratio. As simple as that. This is how simple this strategy actually is. And this is a day trading strategy. Let's go ahead and do a couple of more examples as to what is the, how to actually set the take profit and the stop loss. As you can see, this one could have been a little bit more profit, but 1.5 is still really, really good. If you can do 2.0 is actually fine, but we're gonna stick with this one on the 1.5. So right now what we're looking at is actually for a new entry. Now, how is it that we're gonna look for the new entry? We're looking for a change on trending so that it can become an uptrend, right? So the first parameter is that the trade closes above the moving average, right? So we have one. Now this one touched the moving average. So the second parameter is not being met. So we're gonna have to look and see what is the next opportunity. This one also touched the moving average. Now is retracting a little bit. Now here we have a good example. So this one closed above the moving average. Now this one closed without touching the moving average. So all we are waiting right now for is actually a candlestick that closes above the highest of the previous candlestick. So we're gonna see if that happens soon. And there you go, boom. Take a look at it. It closed right here. And this is, this is the highest of the previous candle. So what do? We're going to enter a long position at the exact same time that this trade, this pair actually closed, or this candlestick actually closed right here. And we're gonna choose a stop loss of, right now, as you can see, the ATR has changed to 8. So we're gonna choose a stop loss of 16 pips, right? 16 pips is gonna be my stop loss, there you go. And the take profit, I'm gonna go and say 2.0, but you can close it before, right? You can close it before if you see that it's retracting and so on. So we're gonna hit on play and we're gonna see, let me just go ahead and move this a little bit more. And right now, this is going to be the movement that you will see in that trade. Let's see, right now it's kind of jumping. Oof, it dropped too much. It's kind of bouncing in there. Let me just go ahead and extend this a little bit. And it's kind of bouncing in there. You could have closed it here if you wanted to. As you can see, it probably was a, 1.5? No, it wasn't even a 1.5. I would say when you see these type of retractions, you can close it, but it's really up to you. Right now, I think it's going to hit the stop loss because it's changing right here in direction. And this is something that you got to keep it also in mind. If you notice, in this specific area, we have a new entry point for a sell position, right? So we have one candle that closed above, then we have one candle that closed without touching, then this one did not close below the highest. Probably this is because of the change on the week or something like that, but here we would have a good entry point. Let me see what date is this one, January 31st. So yeah, probably is because of the weekend, but yeah, I think this is a good entry point for a sell position. Okay, as you can see, it's becoming a downtrend, that's for sure. It's becoming a downtrend. You know what? I'm not going to confuse you with this specific entry because it looks too stable. But here, we're going to look for a new buy opportunity. Let's see how actually this trade actually did. It was like around 1.3, so it's not bad at all. Now, we are waiting for a change on trending on an uptrend, right? Now here, as you can see, we have one parameter met, that is that the candlestick closed above the moving average. Then this one closed without touching, and this one closed above the highest. What does that mean? That we have an entry opportunity in this specific area right here. And we're gonna see the ATR right now is fine. So 10 pips is gonna be my stop loss, and my take profit will be 1.5, not to be greedy, right? And this is how the trade, unfortunately, this one hit the stop loss. It seems like we do have a new entry. Probably there were 3 bull news in here. Let's just go ahead and restart the chart. Okay, so far we have what? The ones that we've been looking at, we have one position 1, 2 positions 1, 3 positions 1. At one point, this one was what? 1.5, the other one was 1.5, and this one was 1.3. So that basically means that we've been making more than we lost in this specific transaction. So we lost 2% in here, but in the other ones, we made 3% in one, 3% in the other one, and around 2.5% on the next one. So we're talking about what, like a 8.5% minus the 2%. That's a 6% increase in your account, in your Forex account. So it's really, really looking good, isn't it? Now, obviously, there are going to be losing trades. That's always for sure. But the point of this specific strategy is the simplicity of it, and more importantly, the profitability that you can actually have on each specific transaction. Why? Because if you notice on this one right here, this one did not finish at 1.5. The coolest thing in this strategy is that you could have made a 6.94 risk reward ratio. Okay, maybe on those one not, but what I do recommend you to do is actually to use trailing stop in order to make even more profits. But right now, this is how you're supposed to use the stop loss and the take profit. Now, there's a couple of things that you need to avoid in order to lose money with this specific strategy. Obviously, right now, I just look at the backstory and try to back test it a little bit, but you need to keep in mind that there are going to be 3-ball news on every single pair. So you need to be careful and take a look at those 3-ball news because we're trading with 15-minute candles. So the problem is that with 15-minute candles, the volatility is too high. Obviously, if we actually change it to 1-day candles, it's going to be super, super easier to understand the specific strategy. Just take a look at the actual uptrend and it's not bouncing around. Even this downtrend, it keeps on going down and down. Take a look at this uptrend. Why? Because it's 1-day candles. But obviously, that's going to be a whole lot of more time analyzing the market, and these are going to be swing or even position trades. So you need to avoid those 3-ball news. Second thing that you need to avoid on on this specific strategy, and super, super important, is the fact that you are chasing trades. If you already missed the entry point, don't chase it, okay? Just wait for a new pair and go ahead and do it. And number 3 thing that you need to avoid is just choosing stop loss and take profit randomly. Why? Because some people actually go like, oh, okay, I think my stop loss is going to be here and my take profit is going to be here. You don't know exactly why. But the problem here, or even if you actually do this and you're 1-to-1 risk reward, you're losing too much money or too many pips in just one trade, while you could just have either here and you already know that either you win it and you win a lot of money, or you just lose your 2%. So I hope that actually makes sense. So just to do a small recap, this strategy is based on change on trending. You're gonna be using a 50 moving average, and in order for you to actually enter, you need to determine 3 things. 1, that the candle closes below or above the moving average. 2, that the next candle closes without touching the moving average, and number 3, that the next candle closes above the highest or below the lowest of the previous candle, and that's your entry point. And the last thing to recap is that you're going to be using your ATR in order to understand what is going to be your stop loss, and make sure you use twice what your ATR is so that you can have at least 2 candlesticks as a margin of error. So hey, I hope you really enjoyed the content of this video, and if you did, smash the like button to support this YouTube channel. If you have any questions, you can put them in the comment section below, and I'll be glad to answer those comments as soon as I can. And thank you for watching this video. Don't forget to subscribe, and I'll see you on the next one.